So, hello everyone. Thank you, Arden, for the introduction. Magandang hapon po. Kamusta po kayo? We hope you are all doing well, and thank you for making time to attend this event. Again, I'm Mary Rose Baligasa, currently the Operations Manager for CRIF Dun& Bradstreet, Philippines. So without further ado, let's proceed with the discussion of how CRIF identifies red flag status for businesses. So to start off, what is red flag status and why do we need to know red flag? So companies use red flag alert to monitor companies they deal with, helping them manage risk and grow their business. So when applied consistently, taking proactive steps to monitor businesses can have a real impact on your organization's performance. So in CRIF, red flag status is given to any company when a discrepancy or inconsistency is found during our business investigation. Therefore, it is a warning to the reader of the business information report that a company is non-compliant to some regulations. So the aim for this presentation is to show you how we in CRIF identify a red flag with identify a company with a red flag status. Since we received several documents, so either from the subject company or from the local registries, we summarize the basis of our red flag in several documents. So these are the audited financial statements or AFS. We have the general information sheet, the articles of incorporation, business permit, and the DTI registration. First document that we will take a look at is AFS or Audited Financial Statements. Everyone knows about business knew that AFS or Audited Financial Statement is very important. Since AFS is very important in making sound decision when dealing with different companies, we will provide you some scenarios on what we are looking at in terms of AFS. So una, inaccurate computations of the total figures in balance sheet or income statement. So to give you a clear illustration, we have here a balance sheet with a total current asset of 15,000. And pero if you're going to add manually the cash, the 4,000, accounts receivable of 2,000, inventories of 3,000, and other current assets of 3,500, ang magiging total lang nito actually is 12,500. But because of this error, the total asset is computed at 20,000. However, not all inaccurate computation will be tagged as red flag. So to give you an example, in the second balance sheet, you will notice that the total current asset is still at 15,000 pa din naman, same as the one kanina. So mali pa din siya. However, kung makikita niyo yung total asset, 17,500 na lang. Therefore, we will consider this as clerical error lang. Number 2, financial figures shown in the balance sheet and income statement do not match consistently with the note to financials and cash flow. So, balance sheet only shows aggregated value. So, aggregated value lang yung pinapakita ng balance sheet. Sometimes when we need to dig deeper dun sa mga values na amount na nasa balance sheet, tumitingin kami sa notes to financial statements as well as cash flow. So for this instance, let's take a look at the other current asset. Kung mapapansin nyo, for 2022, we have 3,500 and in 2021, we have 2,000. However, when we check the notes to financial statements, there is a total other current asset amounting to 4,500 and not 3,500. Pero syempre, hindi kami titigil doon. We're going to check with the cash flow statement. In the cash flow statement, nakalagay dito is an increase in other current asset. So, The increase in other current asset is 2,500. So the increase in other current asset is 2,500. With this, if you're going to add that one in 2021, which is 2,000, the increase in other current asset of 2,500, ang magiging total nyo pa rin is 4,500. So these two documents states that the other current asset total is really 4,500 and not 3,500. Therefore, it will be tagged as red flagged. Number 3, cash declared in the balance sheet is different from the cash flow statement. So mapapansin nyo na yung mga figures sa financial statements are interrelated to each other. So for the cash flow statement, it computed how much cash should be presented in the balance sheet. So makikita niyo yung cash flow statement, ang ending niya for 2022 is 5,500. And yet, the 2022 cash is only posted at 4,000. Therefore, this is red flag. Then the fourth one under still AFS or audited financial statements is the authorized capital is used in equity instead of paid up capital. Actually, there are different kinds of capital incorporations. So sa general information sheet, may makikita kayong tatlo. We have the authorized capital, the subscribed capital, then the paid up capital. So what are the difference between these three capital? First, the authorized capital is actually the registered capital of the company, while the subscribed capital, it is the amount of capital out of the authorized capital for which company has received applications from the general public who are interested in buying shares. So for the paid up capital, this is the actual amount na binayaran ni shareholders out of their subscribed capital. In reporting the capital stack in AFS, paid up capital is used and not authorized nor subscribed. Kung mapapansin niyo yung screen, ang paid up capital natin is 5,000. Pero yung capital stock na reported is 10,000. Therefore, in this kind of scenario, this is a red flag for us. Another one is the retained earnings. So we have actually two scenarios where we consider this as red flag. The first scenario is that the net income before tax is used in the statement instead of net income after tax. This is actually one of the most common issues we found in the company's financial statements. By the way, retained earnings are the amount a company gains after the taxation of its net income. Thus, net income after tax should be used and not net income before tax. Here we have two kind of statements of changes in equity. Kung mapapansin nyo, yung nasa kaliwa is net income before tax, while in nasa kanan is net income after tax. So with this kind of scenario, syempre, mapapansin natin na mali yung nasa kaliwa. So the next one for the retained earnings is the beginning balance of the current year is not equal to the ending balance of the previous year. So let's take a look at some sample illustration for further understanding. So there. So sa image na to, mapapansin nyo na ang ending capital ng calendar year 2021 for the retained earnings is at 2,000. Pero yung kinary forward niya for the retained earnings ng 2022 is at 3,000. So, bigla siyang nag-jump from 2,000 to 3,000. With this is a red flag. The next one is statement of changes in equity naman. Ito naman yung sample ng tama. Kasi kung mapapansin nyo na yung calendar year for 2021 is at 2,000, then yung kinary forward niya dun sa retained earnings na beginning is at 2,000. So for this is a correct financial statements. Number 6, auditor provides opinion other than unqualified opinion. So since we require audited financial statements, we always take a look at the opinion provided by the external auditor. So what is auditor's opinion and why does it matter? So an auditor's opinion is a certification that company's financial statement, it is based on an audit of the procedures and reports used to produce the statements and delivers an opinion as to whether material misstatements exists in the financial statements. So an auditor provides 4 different opinions, and these are unqualified, qualified, disclaimer, and adverse. So what are these opinions? So unqualified opinion is a clean report or a clean opinion. It means that financial statements presents fairly in all material respect. Ibig sabihin, lahat tama according sa generally accepted accounting principle. For the qualified opinion, it can be issued due to gap, departure, or a scope limitation. In both cases, the misstatements are material but not pervasive. This means there is a material impact on the financial statements, but the misstatements are not widespread or do not affect a large number of accounts. But still, meron pa rin siyang material impact on the financial statements, yung misstatement na yon. Then the next one is the disclaimer. Here, the auditor do not provide opinion at all because the auditor is unable to collect sufficient appropriate audit evidence to base its audit on, and as a result, a large number of accounts are not verifiable. And last but not the least is adverse. This is the type of opinion that can only be issued due to a gap departure. In such a case, the misstatements are both material and pervasive. In other words, there is a material impact on the financial statements, and the misstatements affect a large number of accounts. Here, if the external auditor provides opinion other than the unqualified opinion or the clean opinion, we will tag the company as red flag. Then 7, the submitted financial statements to CRIF does not match the document retrieved from Securities and Exchange Commission. So, hindi lang naman kami kumukuha ng documents directly from the subject company. Siyempre, we need to verify it sa mga public sources. And one of which is yung financial statements na galing sa Securities and Exchange Commission. Therefore, if we found na merong magkaiba na documents sa magkaiba yung figures ng documents na sinabmit sa amin versus sa documents na nakita namin sa local registries, then that's a red flag. Then last but not the least is CRIF found no filing of AFS in the SEC for the last 3 years and no proof of BIR received for the latest AFS. So sa mga ganitong scenario, we will think na non-filer na yung company. Therefore, since hindi siya nagko-comply, red flag na to sa amin. Then let's go with the GIS or the General Information Sheet. The General Information Sheet is a document embodying certain information about the corporation which is signed and attested to by the corporate secretary and usually filed annually with the Securities and Exchange Commission. This document includes capital of the company, shareholders' information, and number of shares owned by each, list of the boards of directors as well as list of company's officer. So for the number 1 under GIS, the member of the board has no shares. So, according to Title 3, Section 23, Paragraph 2 of the Corporation Code of the Philippines, every director must own at least 1 share of the capital stock of the corporation of which he is a director. Any director who ceases to be the owner of at least 1 share ceases to be such. So if we found out that any of the board of director doesn't have any shares under his or her name, then there is a non-compliance. For number 2, the declared CEO is not aligned with the company's bylaws. For example, in bylaws, it was stated that the CEO must be the president. Then upon checking with the GIS, it was posted that the chairman is the CEO. In this instance, there is an inconsistency and will be considered as red flag. For number 3, under generally general information sheet is the company's president is also the treasurer and corporate secretary. So in Title 3, Section 24 of the Corporation Code, it states that the same person may hold two or more positions concurrently, except that no one shall act as president and secretary or as president and treasurer at the same time. However, this is in exemption of OPC kasi or one person corporation because the in OPC the president can be the treasurer but the president cannot be the corporate secretary. And lastly, for number 4, the shareholdings when calculated manually resulted in different total. So for the articles of incorporation, we have 1, the company's declared primary purpose is not aligned with the line of business. For example, your company is into manufacturing but the purpose you stated in your AI is in real estate. 'Di ba? Magkaiba siya. From manufacturing to real estate. So, red flag na yon. And second is increase of authorized capital has no supporting documents. For the business permit, it is a key compliance document which entitles and enables a business to legally operate and do business in the area in which the business is registered. In short, business permit can be considered as a license to operate within that specific area. So, if the company does not have a business permit for the latest year, edi wala siya dapat license to operate. So, that's a red flag. And the second, the business permit is not under the new business name following the renewal year in the DTI in cases where a sole proprietorship changed its registered name. And syempre, actually, GIS and AI are for corporations. Then for sole proprietorship, we are looking at DTI certificate. So number 1, submitted DTI registration is no longer valid. Please take note that DTI registration is only valid for 5 years. So for sole proprietorship, they need to renew every 5 years. The second one is the company's DTI registration certificate covers barangays or city only. However, there are confirmed branches outside the declared coverage. So to give you an example, Sample Philippines Enterprise, here you can see that the registration of this company is for City of Calamba only. Pero if upon telephone verification, we found out that the Sample Philippines Enterprise has branches outside the City of Calamba, then we will tag this as red flag. And I believe this will be my last slide, but maybe some of the listeners here are via vendors that encounters these kinds of red flag tagging when they pre-qualify to one of the via buyers in CRIF. That being the case, there might be questions, anong gagawin namin kapag nag-fall kami under these categories? So, before I answer that, actually, the process in CRIF is that we send emails to vendors explaining our doubts or concerns in these documents before we tag a company as red flag, giving them time to explain and answer our issues raised. If you received emails regarding concerns and that falls under AFS or audited financial statements, you may coordinate with your accountant, CFO, or even your financial managers to check the matter brought up by our team. If by chance the AFS needs to be corrected, you need to revise it and submit to us a correct copy of your AFS. But please take note that we only receive documents that are received by either SEC or BIR. If you're a corporation and your issue falls under GIS or AI, you may coordinate with your corporate secretary and or Securities and Exchange Commission. So yung Securities and Exchange Commission might suggest you to provide them revised copy of your GIS or an amendments to your articles of incorporations if needed. But if you're a sole proprietorship at ang problema mo is yung una, you may coordinate with DTI to guide you in this kind of scenarios. And if the issue is yung number 2, wherein yung certificate mo is only in City of Calamba and yet you have branches outside, you may opt to change it to regional or even national. And lastly, if yung problem mo is because of the business permit, you just need to provide us a latest copy of your business permit. So that's it. Thank you very much for giving me an opportunity to discuss how we in CRIF identifies red flag for the documents mentioned. Hope that this session gives you an idea on what to look out in business and somehow possible remedy too if you fall under those categories mentioned.
And thank you very much, Miss Mary. So, Miss Mary, ano lang, quick summary lang. Ano po ulit yung mga red flags na tinitingnan natin sa CRIF?
So, yung mga red flag na tinitignan natin is related to the compliance na sa mga documents na na-mention ko kanina. So, nabanggit nga kanina na yung mga maliliit lang na details, minsan nakakalimutan na natin. And
Right.
here in CRIF, we check that.
So it's not just about having the documents, it's also about the contents of those documents, no? So it's not just about filing your AFS or filing yung tawag dito, financial statement mo sa SEC. But it's also important, ano ba yung nakalagay doon? Balanse ba talaga yung balance sheet mo? And does it actually reflect accurately yung financial performance as historical performance ng inyong kumpanya as Miss Mary shared earlier today?